Hey everybody, welcome back. S&P, another higher high. We do have some changes that we have to go over. What I want to do is just start with the basics here. We keep talking about what's going on out there in the world and looking at this short term. And if you've been watching this channel for a while, you know we look at things longer term as well. And I just want to be Captain Obvious. You see the wick right here and the wick right here? That is a resistance area. We can see how we broke that and we pushed through that. Now we're pushing through this with CPI coming out this week, with PPI coming out this week. You have data point after data point after data point coming out this week. You have some news coming out on tech this week that no one's even paying attention to. And that sector is actually heating up, a very specific sector. Part of that sector is heating up. What's happening here? You have wicks to the downside. We're supposed to have all this uncertainty and we just keep going higher and higher. I do see a couple cracks, and we're going to get into that. But I just think it's really important to take a step back and go, this is 2024 right here, and all we did here from 24 on was rip. Then we got to the top of that, came down, and then we ripped again. Stopped at that level, and then what'd you do? Broke out, and then ripped again. So while we're sitting here pontificating, the only thing that's happening is we're rotating. We're going into financials, then we're going into retail, then we're going into semis, then we're going into software. That's all that's happening here, guys. It's rotation, rotation, rotation. The rotation is starting to pick up, and that is because of the skew. Now, for time's sake, I'm going to link the video at the end for the skew because we have too much to go over, and I've gone over it several times, but essentially it explains why volatility is going to increase and not decrease, and why it doesn't mean the end of the world. Now, I do see some cracks, and I do want to go over this because I think it's pertinent. Number one, I don't know how sustainable it is to keep doing this on the histogram, for us to keep dropping on the histogram and for this to keep going up. I don't know when this comes home to roost or if it remedies itself. I don't have anything here that's actionable. I do have a concern when I see this, but I don't have anything that's actionable, and I'd be remiss if I didn't point it out. But take a look at this on the Qs. We're seeing the same exact thing. We're seeing that breakdown again. Now, is this a reason for me to do anything? No, it's not, because if I did anything here, I would have missed a huge level. But to not pay attention to this, you would just be remiss. What this means to me is that rotation is happening more than we think it is. And usually if I'm rotating, then MACD is going to do this. MACD is going to streamline or kind of go down a little bit, and then you're going to keep having those MACD crosses, and then they're not going to amount to anything. And the reason is because internally you're churning, but you are seeing some signs that you do have the breadth increasing. I went over that Saturday, link at the end of this for that video. But you are seeing the breadth increasing, and that can lead to the MACD remedying itself. But we keep hearing about IWM and what a great day it was for IWM to outperform. Did the futures market outperform today? Yes, IWM outperformed, right? The Russell outperformed today. So if I go here and take a look, yes, the Russell outperformed in the futures market, 100% it did. How did retail and institutions handle that when they had the ability to act today? They sold it. No matter how you want to slice it, they sold. They took advantage of that and they got out. So then you would drill into the 17.9% holders, which is KRE, the retail names, the retail regional names. And what did they do? They sold them. This is an issue. Now, we're going to talk about the good news that came out of the stocks today, why AMD is moving the way that it is, why NVIDIA is moving the way it is, Taiwan Semi hitting all-time highs. We have to get into it all. And it's very important that you watch that part. You might want to watch it a couple of times. But if I look right here and we look at this move, that's great. But note how we're flipping right here. You know, the one lesson that we went over a couple months ago, and I point these lessons out again and go over them over and over them again because of your comments. So keep the comments coming. Remember I said when this histogram changes colors, that's usually a sign that you might be nearing a bottom. When the histogram changes colors, specifically to the downside, not the upside, when the histogram changes colors, that might be a bottom. So if you just go through these and look at that, you might see something there that looks good. Maybe something to put into your own screens, maybe not. But again, it's a data point, and I would suggest that you take a look at it. Now, as we lift and we approach, as we refer to this control bar, what are we saying? We're seeing we're flipping from red to what? Green. Okay, so this is very important for me because I would take a step back, and I always want to analyze and go, if I look at 2024, how many times have I had one green bar? Never. Does that mean that you couldn't have one green bar by itself? No. It doesn't mean that. It means you could. But when I go through this and I go, okay, well, let's go back to 23 and go, okay, the worst case scenario is I've had two. So if I was to average this together, I might come up with a number that suggests that this could go on for a couple days before it fades, if it fades. but that would give me some issue there, right? But at least I have something to work with. But that would lead us to, well, what's been leading? IGV's been leading, and we've been talking about this cup and handle. You guys are probably sick and tired of me talking about it. But what are we seeing? Well, this is not getting as green, and we're getting a little weaker in here. Well, does that mean that we need to get out? No, remember, we don't use the histogram like that. We use it for bottoms, like when it changes colors from red to light red, that usually is a bottom. So if it changes colors from red to light red, that usually may mean that there's a bottom there. And you can see this over and over again, right? But on the upside, no. But it does mean that you might be taking a rest. And it doesn't mean that you're not going to go higher, but you can see in here, we just kind of rested for a little bit, and then it's sold back down, and then we reset, all right? Maybe that's happening, maybe not, but we're seeing that with the stocks. And take a look at what else is moving today and what else flipped. XLK flipped. And look at that. Now you're starting to push again here. Again, we can see the flip right here where we go from red to light red, and that might be marking what we refer to as a possible bottom. Now, stay with me. We talked about this flip on June 10th, and we can see from there in that flip on the weekly how that played out. Now, there's some interesting developments with smart money, dumb money, and the smart money index, which are two different things that we're about to get into. But what I like to do is I like to look historically at the RSI. And what I'm going to do here is I just want to mark off specific levels. So if we see this peak right here on RSI, we can denote that that was a period in September 2020 where we sold off a little bit and then rallied. And we could just kind of keep going through this over and over again at those levels. I'm going to have to take this off for a moment. And we can just see at those levels that that's exactly what started to happen to us, right? Those levels, when you're over or near that level, they kind of started to become what? They started to become a little bit of areas of interest. Now, of course, we had $1.7 trillion invested in the stock market and everybody was a genius. But when you start to mark the tops of these and the roll down, the tops and the roll down, not just the top, but the roll down is the part that you have to pay attention to. You can start seeing like, okay, these are places of interest. Now, that doesn't mean you're going to drop precipitously. You could only drop for like a week or two, but it does mean like, hey, we're a little sleepy. We might need a rest. And you can see the divergence right here, right? You see that divergence right there? So for our sake, what I'll do now, because this is exactly where I'm going with this, I want you to look at the divergences, because divergences to me are the most misunderstood things out there. So right there, you have a higher high and you have a lower high. And most people are going to look at that and say they don't see anything and there's nothing actionable about it. And that's fine. And you can have divergences that don't lead to anything. But when you see these over the top of a chart, you might want to pay attention to them. If you remember, I'll show you in a moment, but you see this right here? See what's developing right here? Now, we're not there yet. Let's be really clear about that. We did not roll yet, but this is a possible negative divergence that is developing on the Qs. So then we would go and take a look at the SPY and go, do we see something like that? Not entirely, because you're still at that same level, but we have made a higher high. So this does need to push. But remember, negative and positive divergences are places of interest. It doesn't mean they're be-all end-alls. You may remember this when I posted on Twitter a couple years ago, and I said, the bottom's in, nobody's going to ring a bell. Now, of course, we had the macro event. Everybody knows the stool, but you had the macro event here where we had CPI peak. But at the same time, if you were just to look at this chart over, you would not have seen anything. But this was a clear indication that, hey, we are forming a positive divergence on the RSI. It is something we want to pay attention to. You could look here and you could say the same exact thing, like, well, it's kind of a negative divergence there, isn't there, right? And it doesn't mean that Armageddon's coming, but it does mean that it's an area of interest to pay attention to, and especially when you see what smart money, dumb money's doing. So in front of us, we have smart money, dumb money. Now, we refer to this as institutions, and we refer to this as retail for those that are new. And the reason we refer to it is because smart money isn't always smart and dumb money isn't always dumb, but that's how they refer to institutions and retail, and that should tell you what they think about us. And what we're always looking for is we're looking for divergence and patterns. Now, I was asked to go over this, so as always, your comments are read, and I do respond to them. I would suggest that if you want to see things like this or just want updates, just comment below and I'm more than happy to do it. It is by Sentiment Trader, and I've talked to them about this and they are more than comfortable letting me do this, and I have no affiliation with them whatsoever. All right, let's get to it. So what are we saying? Well, we're saying retail start to buy, and then what else are we saying that's of importance? Now, this is what I think is really important. Not only is retail starting to buy in here, I'm going to make that red to make it a little clearer, but we're seeing institutions just dumping. Well, this is bad, right? It's bad until it's not bad. Okay, well, what does that mean? Well, they refer to this as smart money, dumb money. We refer to this as what institutions are doing, and this is what retail's doing. Institutions can only sell for so long, and then what they do is they find a way in when retail pukes. Retail moves fast like a hare, and institutions move slow like a tortoise. What I would say to you is if we highlight the blue, which is smart money, institutions right here, and we see that when they sell, what happens? Well, they start selling, the market goes higher. They start selling, the market goes higher. Okay, it's odd, right? But what do we really follow? Okay, so we seem to really be following when retail is buying. Even if retail peaks, we seem to be following that. It's more to do with the spread and how much supply they're throwing out to us as retail buys. But the bottom line is, as long as you see retail buying and institutional selling, we're in good shape. If you start to see the inverse of that, we start to have a problem. And that's the important thing here. Retail is still buying and institutions are still puking. Now, if we look at this, and let's just do a year. And again, institutions, retail, that's how you should think about it. And what we're seeing here in November, take a look at this cross. And we're buying faster, we're retail, than institutions are selling. Retail's buying faster than institutions are selling. That spread, okay, that spreads everything. And the spread is essentially saying retail is buying faster than institutions are selling. And that's why it's so important, okay? So when we see things like this and you have these crosses and you see us drop down, what this means is institutions, the turtle is buying, retail is puking the hare as fast as it possibly can. Hence we drop. Retail just takes their time, or apologies, institutions just take their time. Retail scared like a little rabbit, right? And you see this over and over again. Institutions will sell. And there's a lot of reasons institutions are selling right now. There's a lot to worry about on the horizon, or I shouldn't say that. I should say there's a lot of uncertainty. And here comes retail to save the day and bail out institutions. And then the cycle will complete itself once again. And just so we can really get in there, we're just going to do a year to date here and take a look at a year to date. I appreciate people telling me that they listen to this and drive. So I will try to get more descriptive as it goes. And someone said enunciate. I'm doing my best, man. I'm doing my best. But if you look at the peak right here and we look at this level, and then we see this level right here, you could say, oh, well, that's good. It's good as long as retail has some room to buy. Retail had room to buy here in April. Does retail really have a lot of room to buy, or is retail pretty maxed out? Retail's pretty maxed out. So I don't know how much they're going to be able to buy if they start puking it out here. And there's some signs that they are puking it out. Institutions are puking it out. Now, speaking of cracks, what's in front of you is the smart money index. And this is very different than the smart money, dumb money confidence spread. This was actually created, I believe, in the 60s or 70s by a guy named Don Hayes. And let me see if I can find out what he says. Yeah, they don't give you the date on when it was created. But here it is, Don Hayes. And what he would do is he would take, again, here you can see smart money. He assumed the tendency, we want to bet against the opening action. So whatever the opening action is, they want to bet against, and they want to bet with the closing action. We know that institutions move on the close. Institutions' favorite time of day is what? 2:30. And then we can see how that starts to play out into the last, what? Hour of the day. So what he would do is deduct the first half hour and then add the first hour. So during the first half hour of the trading day, we gained 5 points. We would ignore that until the last hour of the trading day. Now, suppose the last hour lost 8 points. What you would do is you would take the 8, is that's your starting point. You subtract the opening gain or loss. So you made a gain, and there you are, 5 points. So you're subtracting the opening gain or loss 5 points, and that denotes where we gained 5 points there. And the last hour, minus 8 points. So you would take 13. Meaning you're betting against the data. So if the morning actually drops and you go up at the end of the day, then it would be very different here, right? But that's not the case. It dropped at the end of the day and it rallied in the beginning of the day. So because of that rally in the beginning of the day, meaning if this was a loss, you would actually add it. So when we look at this number, they're denoting retail and they're saying we want to see what they're doing in the last hour. It's really important to understand what you're looking at. And this is one of the things I always tell everybody in the community. By the way, if you are on the wait list to get into the community, please check your email tonight. The wait list got pretty full, so I did send out some invites for people that were interested. So please check your email on that. And then I'm going to shut the community down for a fairly decent period of time and just focus on who comes in. It's a pretty small community and it's pretty hyper-focused. So I speak to everybody that comes in. So I do need to close it for periods of time. But if you are on the wait list, just look. Anyway, so this is really important to me, guys, that you understand this. Because if you understand what's going on under the hood, then you know what to look for. I always explain to people, this would mean that maybe you should start looking at the last hour of the day. Maybe you want to start seeing how that goes. Anyway, smart money index, and we can see right here from November on, it just ripped. We just exploded. They were probably selling or buying off the open, but at the end of every single day, we're buying, buying, buying. And then you mark off right here, and you can see how that denotes there. And then what happens a little bit later is we get this little blip, and then we start up again, and then we start dropping down again. And we can see that. Let's drill into this on a shorter time frame. So we can see right here on the yearly how this is playing out, where you just from November, it was just a rip straight up, and then how we broke right here. And then we can kind of see again how that played out. I mean, it's perfect. It's literally perfect. You can see how it started getting weaker and telling you that you have issues. Now, you did make a new high, but there is an issue that I see that's worth paying attention to. This is the year to date. And what we need to make sure of is right here. We don't want to start breaking these kinds of levels. And that could actually be drawn a little bit better. But what we don't want to do is when we have a level like this, we want to make sure that support and resistance holds. So we need to make sure that that holds. Maybe this turns into kind of a cup, and maybe this turns into a handle, and then maybe we push. And we have enough data coming out this week, right, that's possible. But this is certainly something that we have to pay attention to, because if it doesn't do that and we start to roll down, so we'll be watching this weekly now, but if we start to roll down here, we're going to have to really pay attention to this. Besides the economic data, you have some other really key events that you need to watch this week. Now, we're all aware of the skew and the volatility in the market, but you might want to jot this down or screenshot this. So this is Taiwan Semi, and for those that don't know, Taiwan Semi is the corporation that makes all the chips. And they're talking about their capacity being greater than expected. Morgan Stanley came out today and said earnings look like they're going to be great. Before earnings, they come out with their monthly sales. And this could be why you're seeing AMD rally. And we're going to get into these names in a minute and see the shift we saw in semiconductors and dig into this. But these are all dates. These are earnings, and everyone's going to wait for earnings. And people aren't even aware that this is coming. And if you're watching this video, you are now aware. But you might want to mark these dates down, or you might want to screenshot that and throw it into a Google Calendar. I always run a Google Calendar with big economic dates because I find it extremely helpful. And I would suggest that you think about doing something like that as well. But this is going to be big, and they're already telling you that it's going to be big, and the investment banks are already coming out and saying, we're watching this very closely. And this happens right before ASML's earnings, which is next week. So if we look weekly at Taiwan Semi, this thing's just been an absolute monster. I mean, no one can refute that. Anyone would conceive right at these levels, you've held pretty nicely. And then from here, if you just came straight across, it's just, someone likes to say, absolutely glaring. You can see the retest right under the wicks, and then you just see the levels where we just kept lifting up over and over again. I mean, it's kind of hard to miss, isn't it? But what's really important about this from my perspective is what happened today. Now, today, I'm going to just drop this right here, and let's click off this for a moment. Taiwan Semi gains as Morgan Stanley expects growth. Now, we have those dates coming out, but they're getting ahead of this quarter. Everybody's trying to get ahead of the quarter, and this is what you have to do now. Not only do you have to get ahead of the quarter, you have to start thinking about where the institutions are and what they're doing. If we know that smart money, dumb money is telling us that institutions are selling, then we know retail is going to do what they're going to do off the open and get all giddy. We know that, right? That's what retail does. They get giddy. And they are pretty much like a cat in a hot tin roof. And then they realize what they did later. And then they watch their hopes and dreams get smashed after 3 or 4 minutes. Everyone's going to make millions. And then by the end of the day, they're borrowing money, right, to meet the margin calls. All right. What you want to do is you want to set these levels up. So for me, this was definitely something I was interested in. And all I did was just stalk it all day, literally all day, and just wait. And there were a couple things that indicated here that I should get into the trade. I'm not going to show this one and how we got in because of time's sake, but it's really important to mark off your levels and then just wait. You want to mark off your levels and then you want to wait. And this would be a level that I would tell you that you might want to watch tomorrow, but this is a big event coming up for Taiwan Semi. And this is exactly what I was talking about. You want to follow the money. And please listen to these words. When the skew moves the way that it does, where you have a fast skew, and I'll link that video at the end, you're going to have rotation like you have not seen before, probably in decades. No one has seen the rotation that you're about to see unless they were trading in 08, 09. Take a look at that skew chart. If you want me to go over it again, I'm more than happy to. Actually, do me a favor. Somebody comment on that. I feel like I've gone over it ad nauseum about 5 or 6 times, but if you think I should do it again, let me know. It's important to get this. Why? Because you're going to look at Meta and go, oh, we hit a high and that's it. It's done. No, it's not done. You're going to rotate faster and faster and faster. The one trick that you can use on rotation, watch this. The one trick that you can use on rotation, if your first hourly bar looks like that, just Amityville Horror, right? Just get out. There's no reason to be near those kinds of names right now. If your bars look like that the first hour of the day, it tells you everything you want to know. You took out a high, institutions sold to retail, they're going to whack it down and they're going to get involved again. And you're going to say, well, they're not going to do that. No, all they're doing is they're buying the names that they want and they're getting their average cost down at your expense. And you can see that really clearly. Take a look at something like NVIDIA here. And this was one that we traded today and did fairly well with. But all they did was rock and roll you off the open. You get the little move, the bounce. You seem to hold what? Your little levels in here. And then what do? They just buy it all day and they just pick at it, but it never really drops, does it? You never really gap fill. Why? Because you have buyers out there and all they're doing is picking at very specific levels. Nothing could be clearer than Tesla. Tesla was beautiful off the open. What they did, we had all the levels marked off, but what they did a great job of was here's your close. So they gap it down on retail. I actually came in long a little bit. They gap it down on retail, look like you're going to rally, undercut you here, lift, fade it, and then they do a reversal. Then upon that reversal, you're lifting off the VWAP, which quite frankly, I haven't been using, and I'm okay with that right now off the open. Later in the day, I think it's decent, but off the open, I think there's too many games right now. They give you this beautiful reversal bar, and then they take out these levels. And watch what they do here, because it's perfect. And what they're doing is everybody's flushed out. They've done the undercut. So here you are, right, with your whole pattern in position. They give you this bar because clearly it's going lower because there's the bar. They undercut you here, reverse it, give you a piercing pattern, and then they push. Once they did that, you knew it was on, and you knew that that's exactly where you wanted to put your trade on. It became very clear. Here, we actually did this trade. Take a look. I think the end of the day is going to look very different. High of the day, boom. That's a amazing bar if you can get it on the chart. You get this on a 5-minute chart. It's hard not to work off that bar and buy more if you get it. If you can get it. I think you're going to get it. And there was nothing about that chart that would tell you to buy it. Nothing. You could do the undercut and say the piercing pattern, but by the time you're through everything else, it's over. Just leave it on. Wow. Come on down. You're not going to, though, are you? Not a chance in the world. Not a chance in the world that that's coming down. Not like that. Come on down, do it. Just give me halfway, at least. You're not going to give me that. I don't think that that's going to just stop. I really don't. That's a heck of a bar to just stop, man. What's that going to cost me to buy that? Nothing. Bought more Tesla. Bought more Tesla. Who's a winner? You just use that low right there. I mean, it's really going to cost me hardly anything. What's it going to cost? $1? Who cares? Compared to where this can go, I don't really care. Up over $1.50 just on that ad alone. Prudent thing would be to pull something out. So we're going to pull a little out, even though I don't really think I need to. Pulled very little out, but I did pull something out. This is called the patent middle finger pattern. I'm up a lot, guys. I'm going to pull something out. I trimmed a bunch. They might have just got me. That's okay. I did really well with that trade. I'm on to the next one. Nice sell on Tesla. Now, once you saw the size of this bar, and I can get into how you should be measuring these, it has nothing to do with volume more than just the size of the bar. You could see the rotation, the backfill to that level. And look at where you held all day. You held the previous level. Well, who's buying there all day? That's institutional buying at the previous close. Just because you didn't hit a new high doesn't mean it's over. This is a really important distinction for everybody, and I would suggest you pay attention to it. Another name that did it was Apple. What they're doing is they're taking you to key levels, and then they're reversing it. So what you want to do is have your key levels marked off. This provided a great entry for us to add to our Apple position, and I'm not going to walk through it now. But if you understand the skew and you understand what's going on with the market right now, you can do exceptionally well. You just have to understand that they're going to constantly rotate, and they're constantly going to be shaking you out. And you're just going to have to accept that. there is nothing that you're buying that you are not able to buy the next day cheaper. There isn't. I mean, you look at names like Meta and think that, oh, I'm not going to get a second chance. And then today, nobody even wants the stock where you own it. It's not over. It's just rotation. Same thing with Google, my 100 levels there, or all the people that were looking at Amazon today and thinking that Amazon was going to die. This is the new regime. This is why people used to not buy tech names. And remember, you have Powell all week, CPI and PPI, so you're going to have even more, way more volatility if the skew didn't even exist or if the skew wasn't higher than it currently is. That's it.